Hello, I'm Carol Clarke, President of Montague Miller Company Realtors, and we're pleased to have back for Montague Miller Moment Matt Hodges, who is with Presidential Mortgage, Compass Home Loans. And Matt, we had such a good time last time. We had more questions to ask you. Had to come back.
Excellent.
So one of the questions I have today is, what are some of the things that buyers need to know about the mortgage world right now?
Sure. Well, there's some changes coming in the short term. One of the biggest things is how loan officers are compensated and how that affects buyers out there. On April 1st, Dodd-Frank becomes law. The rule will go into place.
Dodd-Frank.
Dodd-Frank, yeah, are two senators who wrote the bill, correct. It's hard to determine right now what the effect will be. It is generally thought that it would be a negative effect on consumers because there will be fewer choices that home buyers will have. It was meant to be an industry standard so that everyone have a level playing field, but it's being interpreted right now as being negative to the consumer. So there's some things we're working on.
Why would that be? Why would it be?
Yeah, there's only certain ways that loan officers can be compensated after April 1st applications. They can either be compensated by the lender or by the client directly, but not by both. So in some circumstances of paying points, there's really limited options for a consumer. We don't particularly like this new bill. There are some traders that are actively trying to get it pushed back or modified. But at this point, April 1st is coming and it could have some significant effects.
Don't I understand that one of the things about that bill is that whereas traditionally mortgage loan officers have been paid by commission, that this could change.
Yeah.
Now there is some concern, I know, amongst realtors that when that happens, that if you have somebody that's, as we like to say, has a little skin in the deal, that it's more advantageous to the buyer, that they're going to push harder to make sure that the hurdles are jumped in a timely manner. They have the incentive to get the job done.
Yeah,
have you heard some of those concerns?
A good loan officer should be doing that anyway, along with their realtor partner.
That.
Yeah.
But we know you're a good loan officer. But in the last 5 or 6 years, there's documentation, Matt, of a lot of loan officers out there that
Absolutely.
don't have the ethics and the professionalism and the dedication to the best interest of their clients as you do.
Sure. Well, one of the things that this does that could be seen as a positive is it eliminates overage. Okay. Overage is that nasty figure where a loan officer is charging higher interest rate and reaping additional rewards. Ethical, responsible lending doesn't really accept that.
Okay. Well, let's go back to, we were talking about what the buyers should know. I know there's going to be some changes in credit scoring and how that links to the mortgage, the interest charged and down payment.
Sure, yeah, and those changes have been ongoing and continue to get more costly to our borrowers. They're called loan level pricing adjustments, and both Fannie and Freddie have them. FHA does to a very small degree, but they're cumbersome. If you have a 740 credit score, which is fantastic, and you put 20% down, you still have a hit to your interest rate. Only when you get to a 25% down payment and a 740 credit score, do you not. It's amazing. And so they go down in 20-point increments from 740 all the way down to about 660. At that point, you're paying a much higher interest rate.
Is 740 and above the best credit score can you get better? Like
theoretically 850.
850, you get the best.
Over 740, you're generally getting the best interest rate, along with a 25% down payment.
Is there anything else you think buyers would need to know?
Yeah, absolutely. In April on the 18th, which means that effective on Friday the 15th, contracts written by that date for FHA mortgages will have the current structure, which is a 1% upfront mortgage insurance premium and a 0.9% annual. After that date, it will go up by 25 basis points. For a $250,000 purchase, that means over $50 more on a monthly basis.
So advice would be, if you're in the market, to try to get something written and applied. Applied for it doesn't have to close by April 15th. It just has to be in the system.
It has to be in the system. It doesn't actually even have to be an application, but we have to know the address and be able to secure the case number.
Thanks so much, Matt. As always, we've just got more questions than we have time. So thanks, and we'll have you back again.
Great.